Hey guys, as soon as the stock market opened, stocks fall even after Fed pledges unlimited asset purchases and Mnuchin says stimulus deal is close. What is going on? Holy moly guys, welcome to another episode of the Dogs of the Dow. This is episode 5, week 4. Brought to you by 9 to 5 Dividend Investing. Yes, I am Mike, and in today's video, we are going over my new purchase for my Dogs of the Dow portfolio. So guys, the market is already opened, so let me get quickly into pre-market what the portfolio looked like. So guys, here it is right before the market opened, about an hour before. As you can see from the top left corner, it is 8:33 a.m. on Monday, March 23rd. We took a screenshot of the portfolio. As we could see, right before the market opened again, we are down a total of 43.38% with Chevron. So ticker symbol CVX. So right now that is looking like it's going to be our buy for the week. Again, we are putting $50 of new capital into this portfolio every week. And last week, we actually purchased more of ticker symbol DOW. So our total gain loss, or I should say just loss, has been about 18.2% for that position. The week before that, we bought ticker symbol XOM. XOM is hanging out there in fourth. And the first week, we bought ticker symbol DOW for the first time at, again, to lower our cost basis in that stock. But right now, Chevron is looking like the purchase for this week. Right now, our cost basis for Chevron is $104.89. And let's take a look at the shares, or the amount of shares that I own prior to the market opening. So guys, as you see from this screenshot, at 8:34 a.m. on Monday, March 23rd, we currently own 1 share of Chevron, 1 of IBM, 1 of Coca-Cola, 2.152 of XOM, 1 share of Cisco, 1 share of 3M, 4.36 shares of ticker symbol DOW, 1 share of Pfizer, 1 share of Verizon, and 1 share of WBA, or Walgreens Boots Alliance. The current value of this portfolio is $693.49. And I don't know if you could see it, but our total loss is $232.24. So guys, again, this is right before the market opens. We're showing you the amount of shares that we have in this portfolio, and we look forward to building this portfolio, as I say, every week, $50 of new currency added. So guys, the market opens on the East Coast at 9:30 a.m. So as soon as 9:30 hits, we will buy our $50 worth of probably Chevron. So guys, there it is, acquired 3/23/2020, 0.85, 9 shares of Chevron at $58.15. Our first purchase of Chevron was when we started the portfolio on 2/24/20. We purchased 1 share at $104.89. So as you can see, Chevron stock is nearly cut in half since our purchase a month ago. This is actually absolutely unbelievable that a stock has lost 50% of its actual value in a month, or less than a month. It's only been 29 days, as we could see from the purchase dates. Guys, this is an unbelievable time in the market, and it's hard to say where the market's going to go from here. We don't know where the bottom is, so let's take a look at ticker symbol CVX, or Chevron Corporation. So guys, the Chevron Corporation, through its subsidiaries, engages in integrated energy, chemical, and petroleum operations worldwide. The company operates in 2 segments, upstream and downstream. The upstream segment is involved in the exploration, development, and production of crude oil and natural gas. The downstream segment engages in refining crude oil into petroleum products. The company was formerly known as Chevron Texaco Corporation and changed its name to Chevron Corporation in 2005. Chevron Corporation was founded in 1879 and is headquartered in San Ramon, California. It falls under the energy sector and is in the integrated oil and gas industry, employs over 48,000 employees, and again was founded in 1879. So guys, as a dividend investor, I have to take a look at the dividend, and thanks to Seeking Alpha, the current dividend yield on Chevron is a staggering 8.69% with an annual payout of $5.16, a payout ratio of 190.67% with a 5-year growth rate of only 2.5% and 4 years of dividend growth. The last amount paid was $1.29. The ex-dividend date was 2/14/20 and a payout date of 3/10/2020, and this dividend is paid quarterly. So guys, let's take a look at some of Chevron's numbers. Take a symbol CVX with a 52-week range of 51.60 to 127.34. So I guess we got a pretty good deal here if you go by the 52-week range. But if you look at the trailing 12-month PE ratio, it's a staggering 36.23. And honestly, it's not a stock I would be buying right now if it wasn't in the Dogs the Dow portfolio. So there you go. Earnings per share trailing 12-month of $1.54. A forward dividend and yield of 8.69 and $5.16. So guys, this is Chevron right now. As we could see, major drop off from a year ago. This stock was flying high at over $120 a share, and now is kind of taking ground at $55.40, already lower than what we bought it as at the start of this video. So guys, we took a look at the portfolio right before we purchased Chevron. When we purchased it, we took a look at some of Chevron's numbers, which as we could say, the oil segment is not one to be investing in right now. I don't believe so. We don't know where the bottom is. Do I believe oil will pick up again? Absolutely. We also got to worry about the pressure that OPEC and Russia are putting on the oil sector, and it's just energy in general. We don't know where we're going with this, and again, as I always say, I don't believe oil is disappearing from the earth, and I believe that oil will make a comeback, but it's going to take a long time for this to happen. It's not going to be overnight. So if you are investing in oil by any chance, please be patient and understand that you may see a dividend cut and you may regret this purchase at some point. But if you stay strong and you invest in good quality companies like a Chevron, an ExxonMobil, or a BP, in my opinion, I'm sure there's others that we can name also, but invest in good quality companies. I'm sure you will do fine. Again, I am not a licensed professional, and if you need help investing in the stock market, please seek a licensed professional. So now let's take a look at the portfolio after we made the purchase. So guys, here it is right after we made the purchase. Coca-Cola is now our top stock. We will see what happens next week. Total loss for Coca-Cola right now is $37.92. And as we can see, buying $50 worth of Chevron has knocked it down to fourth with a total loss of 30.98%. And that, my friends, is dollar cost averaging. As we could see, the cost basis per share has gone down from 104 to 83. Just dollar cost averaging, you get your cost basis down. Honestly, your portfolio won't look as bad. It's a joke, but it's true. And by dollar cost averaging in companies that you believe in or companies that you've already invested in and you want to continue to invest in these companies, you will see your cost basis go down, and also your total loss, if you are losing, go down, which right now majority of stocks are losing. I'm sure there's a select few, maybe the Amazons that are going up, or definitely Walmart, which is unbelievable because people are running out shopping. Never thought I would see people running out shopping again. I figured it would be more online or leaning toward online, but people are actually leaving their house to go shopping. I guess because of the weight that is happening now with Amazon. But let's take a look at the total shares now after we bought Chevron. So guys, here it is at 9:41 a.m. on Monday, March 23rd. We now own 1.85 shares of Chevron Corporation, ticker symbol CVX. The current value is 105.59. with a total value in this portfolio of 725 and 12. Total loss of 250.56. So guys, it's the portfolio right now. We'll see what next week brings us. There will be no changes to this portfolio until next Monday. So guys, keep it here for another 9 to 5 dividend investing video. This is my Dogs of the Dow, episode 5, week 4. We are a month into this portfolio. We still have another 11 months to go for this portfolio to see what it is in a year. Let's see if we beat the Dow. Who knows? But guys, this is my portfolio. 10 stocks that are the highest yielders on the Dow as of January 1st, 2020. And guys, again, I am not a licensed professional. If you need help investing in the stock market, please seek a licensed professional. And please, I know we're going through rough patches right now. So guys, please, if you only invest what you're not scared to lose. But again, if you invest in good quality companies, you generally won't lose it. You'll only see a loss in the stock, and I'll still hold that stock for the long term. Over time, that stock should come back and should actually be greater than what you purchase it at, especially right now, with how low the market has dropped, over 25%. So I say we are officially in a bear market. Has a recession come yet? I don't know. And nobody really knows. And it's hard to get that answer from even the analysts or professionals. So guys, if a recession comes, I think we'll have to look at the unemployment numbers, and that'll decide whether we are actually in a recession or not. So guys, until next week, keep it here. Episode 5, week 4, Dogs of the Dow. Stay tuned for episode 6, week 5. Look forward to making this portfolio into a great portfolio over the course of time and hopefully beating the Dow.